Dipinder Goyal is stepping down as Group CEO and Albinder Dinsa takes the reins with immediate effect. What does this actually mean for the company's future, and where should investors turn their eyes? Mahima joins here with the full story. Mahima, what are you picking up? This is a very interesting piece, you know. I mean, when you have, Dipinder who's getting out, you have seen the company turn profitable as well.
Yeah, so and I really liked, how Jeffrey tried to quote it, right? Blinkit did turn profitable this time, and at the same time, you have the management exiting. So I think before we talk about the management exit more, just let's take a quick look as to how Q3 has panned out, because it's been a great quarter for Eternal, as Q3 stands. Beat across metrics is what we've seen. Blinkit, Hyperpure both turned EBITDA profitable this particular quarter, and overall, they've lifted the dark store guidance, but with terms and conditions. And the important one, Dipinder Goyal has stepped down as MD and CEO, and Albinder Dinsa will be the new group CEO from 1st February onwards. Now, in terms of where the numbers stand, revenue up 2 times, EBITDA saw a growth of around 1.3 times. You have margins which came in at 2.3% versus an expectation of around 1.9 odd percent. So that's also, a great thing. Profitable. Overall, the net profits have grown by around 73 odd percent. In terms of where the segment performance stands, food delivery this time has seen a steady growth, which has not been the story last 2 odd quarters, on a steady trajectory, and new order value. Overall, the net order value saw a growth of around 16.6%, and this was backed by a healthy monthly transacting user addition. For Blinkit, net order value saw a growth of around 121 odd percent, and dark store addition, however, did see some moderation this particular quarter. Hyperpure revenue growth was at 33% and turned EBITDA positive, of course, this quarter. And lastly, going out business, though the net order value saw a growth of 20%, but losses widened because of the launching of District Pass. But management did say that break-even for going out business will happen in the next 4 to 6 quarters. In terms of guidance, 5 to 6% EBITDA margin of NOV is something that they've maintained. Dark store addition guidance, they've raised to 3,500 to 4,000, but they've said that this will happen only if competition comes down a tad bit. Food delivery growth, they've said that 20% growth is something that they're eyeing out for. In terms of where the brokerages stand, it's interesting. The CLSA note that has come out is the most interesting one, because they've said that they have still maintained the high conviction on the counter, and they've also hiked the target price to 506 now. They're saying it's a strong beat in terms of where contribution per order stands. Quick commerce break-even is largely driven by its scale and efficiency, and food delivery acceleration in terms of pace of growth is also very impressive. But on the other side, you have something like a Macquarie, which is still maintained underperform with a target price of 200. What they're saying is better Blinkit optics has been witnessed this quarter, but overall competition is something that they'll still be watching out for. Now, coming to the management change, because that's the most important one, and everybody wants to know as to what this means as an Eternal investor. Overall, Dipinder Goyal will step down as the MD and CEO, and Albinder Dinsa will be taking over as the new group CEO. The reason for resignation that they've given is that this move is intended to kind of avoid the potential conflict, because he wants to explore newer ideas, is what he's said. What should this mean for investors? Well, overall, he will retain his existing responsibilities in Eternal. So long-term strategy, culture, governance, etc. will not change. Day-to-day operations, of course, will fully shift to Albinder, and brokerages believe that in short term, nothing is going to change from a company perspective. Lastly, in terms of the latest ventures that Dipinder Goyal is actually exploring right now, the first one is LAT Aerospace, which is a short-haul aviation business that is revolutionizing the regional air travel India by creating efficient as well as affordable aircraft that uses small air stops. And the other one is Temple, that everybody has been talking about in news lately, which is more of a health tech driven business that he's kind of looking at. So this is the overall view of course, the earnings as well as what this management change means for investors.